Hello and good morning. I welcome you to the morning meeting today on Friday, the 19th of January 2018. This is Jens speaking, exclusively presenting this format to you here for JFD Brokers. So, yeah, we want to have a look at the market and the market opening. In fact, very interesting developments in the DAX, but also in the Euro. Euro very strong. We're pushing towards 123, while the DAX is aiming for new yearly highs, currently trading around 13,400 points. And with a break above this level, there's further room higher up to 13,500, 530. This is the region around the all-time highs. One thing which is really surprising is to see the DAX being that strong despite such a strong euro. And currently, we have to say this, correlations are currently not valid anymore, as we may have had those correlations during the last months. The thing is, and this is what's making things so difficult here. So when you look at the correlation and you see that, for example, a stronger euro here has a negative impact on the DAX or the other way around, meaning a weaker euro is positive for the DAX. Well, this makes a lot of sense to look at this from a risk management perspective. Since just imagine you're heavily long DAX, heavily long meaning, well, you're risking, let's say, 1% of your trading equity, and on the other hand, you're spotting a short setup in Euro USD. You're shorting Euro USD here with 1%. If you have a strong positive correlation, I'm sorry, not positive in this case, but negative, so meaning Euro going up while DAX going down and the other way around, well, you're somehow positioned in one position here and risking 2% of your equity, 1% in each position, and you sum it up to 2%, even though you're betting somehow that both markets will move in one direction, which means DAX up is Euro down, or the other way around. And so this is really important to consider from a risk management perspective here. And but nevertheless, right now, it seems as if this correlation is not given anymore. But in fact, the market instead is the DAX is pushing higher, very strongly higher. So what you can see here is we took out the highs here from yesterday, around 13,300 points. We took out the highs, so far the weekly highs from Tuesday, which by the way were sold off in the afternoon then. You remember that? We pushed not just aggressively higher, but pushed aggressively lower in the afternoon when the Dow Jones had at 400 points lower. That's also something we want to have a look at, by the way, in a few minutes here. And yeah, currently the market, the DAX is stabilizing, and now let's zoom in strongly here, or sharply. We're trading in short in reach of the current yearly highs around 13,400 points, and above that you can see it in the hourly chart. Well, it's 13,500, 530 points, the all-time high. And so in fact, it's definitely a chance to see such a push higher. Nevertheless, first question I ask myself here is, why is that? What's happening right here? Looking at the DAX, okay, well, that makes somehow sense, because if you zoom out of the chart, you can see, okay, this is a choppy market environment all in all. And so such a move higher is as likely somehow as a push lower. And after we made it several times down to 130, 150 here, market didn't break. Well, what does it mean? Somehow that obviously there's enough demand to push the market higher. And now we have the small expiration at the Eurex today too, so probably there's some price action and some trading going on around this small expiration. And if you put all this together, well, you see this push higher. Even though I have really trouble to understand how is it possible to see the DAX performing so well and the Euro USD here pushing that higher. I mean, well, you could easily argue and say, well, it's the weaker US dollar. Look at what's happening GBP USD. We have seen this push to new yearly highs, small push, small spike here, but also dollar Japanese yen, for example, pushing lower towards or back below 111 again. You look at, for example, the Australian dollar, Aussie USD here. Well, you see US dollar obviously weaker on a broad scale. So, well, it's probably the weaker US dollar. Nevertheless, I mean, all in all, it still does not justify such a push higher in the DAX then. And if I see such a combination, I still wonder what's going on. And now something really interesting is happening. And that was a thought which struck my mind in the morning then, and something I want to share with you. Because so far, no one really talks about it. No one really thinks about it. And nevertheless, on Monday morning, respectively, probably Saturday, Sunday evening, we could get to see some big negative surprises, let's say, for the euro, but also for the DAX here. What I'm talking about? Well, there is. You may remember last week. Let's go back 1 week from now, and let's have a look at what happened at the 12th of January last week. So we pushed above 121 to the highest levels since December 2014. So the day before, last week on Thursday, we could easily argue that the driver could be found in the ECB minutes here. And those ECB minutes somehow suggested that there will be a more hawkish stance probably in the upcoming ECB meeting. So based on the ECB minutes from last week, we suggest somehow, or we could come to the conclusion that next week on Thursday, Mario Draghi is probably already giving some ideas on what the what and when the QE program, the end of the QE program, could look like. So probably it's just cut and then we don't see any asset purchase anymore from September onwards. And on top of that, probably he gives some hints in terms of what to expect afterwards. How likely is it that probably the ECB will hike rates here in the let's say upcoming 12 months or so? And so with these minutes, well, it's probably possible to see or to find a solid argument, solid fundament here why euro pushed higher here. The thing is that this push above 121 came last week on Friday, after here in Germany the Christian Democrats and the Social Democrats came together and decided after their talks, after the finish day talks, that there will be another so-called grand coalition here. The two biggest parties finding a coalition here together after the election in September last year. So after the election, no one really thought about this, especially because the Social Democrats came out and said, you know what, no grand coalition anymore. That has also to do with the fact that they are just a junior partner, and they are junior partner for years now, and you can clearly see this. So there was a party of the somehow it was a party for nearly everyone, especially those who were considered to be workers, let's say. And this influence and impact the Social Democrats had here over years diminished over the last years, because they were not capable of bringing their policy really to the German population, let's say. And you can really see that. So they are really dropping significantly in value here, and polls show that they are losing influence from day to day, let's say. So, and that was one of the reasons why they just said, you know what, no coalition, no grand coalition anymore, because we have to find ourselves right now. And they were really, really strong in their way of pushing this right after the election. So they were really aggressive somehow. So there was someone, some high politician being asked here, so what do you do today, because they suffered enormous losses. And this woman looked at the camera, and again, it's you probably may know her. It's Andrea Nahles. She's high-ranked politician at the Social Democrats, and she really looked in the camera, smiled, and said, "From tomorrow onwards, we'll kick their asses." And she was really aggressive with that. And everyone knew, okay, no grand coalition this time. Then the talks failed between the Liberal Party, between the Green and the Christian Democrats. And since the Alternative für Deutschland, the AfD, were capable of getting something like, I think, 14-15% or so, and became the third biggest party in the German parliament, well, it's only a grand coalition, else you have a minority government here. And Merkel has to run Germany with a minority. And so now they are coming together again, and now the Social Democrats are more, let's say, they are way nicer, and they started talks, and last week they find a solution and they say, okay, yeah, let's try this a third time. The only problem is that the Social Democrats and their bases, they are not really happy about this, and they are willing to say no. And so now the Social Democrats, over this weekend, the upcoming weekend now, tomorrow and Sunday, they will have to find somehow, especially the top politicians, have somehow find reasons to convince their bases to say yes to such a grand coalition. The only problem is that so far it looks as if they don't say yes, but they say no. So, well, if you look at this impulse here on the upside last week, you can only suggest how important this decision is, and if they say no, and you have we see continuation of this political vacuum here in Germany, well, what will happen is that probably euro will suffer enormous losses, as will, for example, also the DAX, who has a good chance then to see aggressive pullback here, and this push higher from today being identified as a potential fake move, let's call it. So, and that is something which you should definitely keep in mind, because on Monday morning, we could definitely suffer huge losses in the DAX with the sharp gap lower. I'm not saying that this is a sustainable move then. I mean, it depends on several factors here, and usually we say that political lags have political announcements here have short lags in the markets, which means it does need to be a sustainable move here. But nevertheless, it's a good chance that we get to see a sharp drop on Monday when the markets open. And this is true for the DAX, but it's also true for the euro here too. And that means that you should be definitely really careful when taking positions over the weekend in the euro, but also in the DAX. And on top of that, even though there's probably a yes from this basis from the Social Democrats, it's probably only that the euro will probably see a small spike higher, if at all, since most of this seems to be priced in already after this push higher, and then such a gap up here is sold again into the start of the next week, probably also based on the speculation that the ECB next Thursday will come out with a more dovish stance in their statement, which they will deliver next week on Thursday. So based on that, it's in fact really difficult right now to take a position in general. But I think with this in mind, it's definitely worth to really question this move higher in the euro. And also be aware of that in terms of positions you may hold over the weekend, especially when it comes to the DAX and when it comes to the Euro USD here. From a technical perspective, it's still the same picture. So Euro USD, once we push below 121.60 here, these are the lows from last Wednesday. There is further room on the downside, which could push us as low as 128, 121. And the picture, let's call it darkens, once we push below 119. This is still a long way to go for the bears, but nevertheless depends also here on, first of all, the political developments over the weekend here in Germany, but also should depend probably even more importantly, or it's even more important to watch what the ECB will deliver next week here on Thursday in their statement. And yeah, so in fact that's it. That's it on the euro and on the DAX. In the DAX, by the way, be really careful in terms of the developments. Now other things come into play, and you may wonder, well, this whole story around the political developments, I think, where it's probably might sound to some of you like I try to make somehow sense of the price moves. Is this really necessary, respectively? Is it helpful in terms of trading? Well, to me, sometimes it definitely makes sense, especially because, and now the other markets come into play, because all the other markets behave in a way which is completely not bullish and justifying the move in the DAX here. Probably it's justifying the move in the Euro USD when it comes to the political developments around potential shutdown in the US right now. If you look at the current momentum here in the US dollar being offered on a broad scale and not being considered attractive, even though currently the Fed here is considered to keep on hiking rates in the upcoming months, and that way, or that said, the US dollar is by far the most restrictive and from a yield perspective most attractive currency in the G10 currency universe. So with this in mind, I mean, well, probably the move in Euro USD makes sense, but it's very, very difficult to see this move to be sustainable here in the DAX. And now, therefore, let's have a look. Let's have a look here at the Dow Jones and developments yesterday. So the Dow Jones, in fact, came slightly lower yesterday. Was no big move, but the market seems to be more and more exhausted on the upside. And if you look, for example, on a 50-minute time frame, what you can clearly spot yesterday here as the market making lower lows here, even though the key level might be or can be found around 25,880, 25,900 points, and we have to make it below that level to see another good chance then, by the way, to push to the lows here from Tuesday, which can be found around 25,700 points. But we have definitely to say that all in all, the market seems to be more and more exhausted on the upside. Let's have a look here at the 4-hour chart. You can see the market making new highs, and they are not here confirmed in the RSI 14 anymore, showing that the momentum on the upside is clearly diminishing. And with this in mind, there's probably at least a fair chance, with the VIX, for example, also ticking higher, there's a fair chance that probably there's some, let's say, profit taking into the weekly close, whatever it might be, but that the Dow Jones probably will see another leg lower here. And if this happens, remember what happened on Tuesday in the DAX. So this move in the DAX right now, by the way, attacking the yearly highs, you can see them here. Yeah. So if you see this push, by the way, one sec. Okay. If you see this move higher, you'll probably remembered at the price action from last Tuesday that was similar. Well, it's similar to what happened there. You remember we had a strong start into the day, then we sold off for whatever reason and took off from there again. There was some rumors around the ECB probably which made this move happening, but whatever it was, the fact is that the market topped out here around this time, by the way, around 11 a.m. GMT, and then pushed slightly lower, gave back some of the gains, nothing big, and then US markets came in and the DAX turned from being heavily green or deep green to deep red within hours. And this is definitely something you have to worry about here when looking at the current price action, when looking at this push higher in the DAX, because the question is still, is this a sustainable move? Especially with being a little skeptical about the Dow Jones here and the developments there. So if the Dow Jones, or respectively US equities in general, start or come into the weekly close weaker, it's not unlikely that probably here the DAX will probably see a push lower from here too. And that's definitely worth considering, especially when you're positioned on the long side here and currently see probably some nice profits here. Let's say based on the breakout of the open range, whatever, if you see some nice profits, you probably want to be a little more aggressive with your stop here, since the room on the upside is somehow not that given, even though on the other hand, you have to say, if you look at the daily chart, well, look at this. I mean, if we are now making it above the highs here from the second week of January here, the current yearly highs 13,420, 430 points, well, there's no further or there is further room on the upside, which could easily bring us up to 13,530 current yearly high all-time highs, and probably even above that level. And yeah, so that's definitely something worth considering, especially probably when the US dollar finally can make some of the losses here and reverses this move, which can be seen here from yeah, Wednesday evening onwards in the Euro USD, which pushed us back above 122 at least. So yeah, with this in mind, let's have a look here at dollar Japanese yen. Also strange, let's call it strange development. I mean, if you see the Japanese yen being so strong, and by the way, right now I'm currently closely watching the price action in Japanese yen and Swiss franc, because in CAD Japanese yen here and also in CAD Swiss franc, I consider two long engagements which are looking for seasonal patterns and try to capitalize on seasonal patterns which are occurring from next week, Tuesday, Wednesday onwards. And so I closely watch the price action in the Canadian dollar Japanese yen, and so watch the price action in Japanese yen, but also watch the price action in Swiss franc. What you can see is that both are bid, while it's not just the Japanese yen and Swiss franc being bid, but also gold being bid against the region. You may remember that I said potential long trigger in gold can be found around 1,325 USD. We pushed to this level yesterday in the morning and took off from there. So, and this is usually a clear sign of risk off in the market. So if you start to be skeptical about the developments in the US equity markets, then look at the Japanese yen, see it stronger. You look at the Swiss franc, so you see it stronger. You look at gold, you see it stronger. Well, this is definitely something where you start to really wonder what's driving DAX higher, especially considering the strong euro right now. And that's one of the reasons why I'd say be a little careful here and consider this mode probably to be a little extended. So if all of this not takes place, and if the market can stabilize here at this high and elevated level, Dow Jones comes in stronger, respectively US equities in general come in stronger, well, there's no real reason to be skeptical, and don't see a significant break into the weekly close of the DAX here around 13,400 points, even though I'm a little doubtful here whether this can really happen. And so this is definitely something you should consider in the afternoon then with the US market open. And probably it's not the worst idea if you're positioned long, as already said, to be a little more aggressive with your stop right now and keep on trading it a little more aggressive here. Probably try to cash in at least on half of a position or something like that, and see whether another break can really occur here, since the market really seems to be a little extended and the move itself seems fragile. Let's say it's at least fragile. And that's it from my end. I wish you a happy and a nice weekend. Enjoy yourself. Take care. Talk to you on Monday again, 10:30 a.m. GMT with the morning meeting. I definitely look forward to it. Talk to you then. See you and bye-bye.